Do you want to make a lot of money while taking on zero risks? Then CSGO investing is the right thing for you. At least that's what quite some YouTubers are telling their audiences. It's true that Counter Strike investing has been going great over the last couple of years. But in this video, I want to discuss one specific factor which determines a part of the yield that can be expected from investing as a whole, and in deal sale also from Counter Strike. I'm fully aware that there are many more factors which have an influence on your return. If you're investing in cases, for example, you should also worry about the rate of consumption and the amount of cases in existence. But the factor that I want to talk about today is part of any investment, and it's called risk. Although investing in Counter-Strike items like cases, skins and stickers is definitely different from investing in stocks, bonds or cryptocurrencies, a lot of concepts of the mentioned older investments also apply for Counter-Strike investing and even investing in digital goods as a whole. Are those ideas and concepts boring and useless? Definitely not useless and boring only to those who want to lose rather than make a lot of money while investing. Now let's start with a video which I've divided into two chapters. The first chapter is on risk and return are often, if not always, intertwined. Riskier assets give you higher return over the long term. And I want to emphasize over the long term. The higher return is a compensation for the risk that you had to endure. See my self-made table for reference, and you shouldn't take it too precisely, it's just a rough estimate. But your different investments that you can do, like not investing at all and holding cash, putting your money into bonds, stocks, crypto and Counter-Strike, have increasing risk bound to it, but also give you a higher expected return. Now, this point and this whole video isn't investing advice, but you should keep this return and risk table in mind. Risk has to also materialize even now and then, as it couldn't be considered as a risk. Look at any stock market crash over the last 20, 30 or 40 years and you can see 20, 30, 40 or even 50% drops. That's absolutely regular. In turn, this means if you invest into a low risk asset class like bonds or don't invest at all, you won't see any drawdowns. But this means you're also missing out on possible returns. That was chapter 1. It's a lot less long than chapter 2, but that's due to chapter 2 actually having an impact on your investments. The first type of risk that I want to talk about here is the diversifiable risk. And this risk is very interesting. A diversifiable risk is the standalone risk of an investment. To make a Counter-Strike example, if you're investing in CSGO cases, you bear the risk that one case is more liked than the other. Some cases are reintroduced in some kind of drop pool, and some rare or gold items are reused in a newer case. Compare the Phoenix Breakout and Falchion case, for example. 3 cases which were released around the same time, 7 to 6 years ago, and those cases had a very different return to this date. Though all of them did rise quite drastically from around 3 cents, the Falchion case is sitting at a little over 23 cents, the Phoenix case is hovering around 80 to 90 cents, and the Breakout case is sitting at 2 euros. The risk of underperforming the market or sector you're investing in can be reduced through diversification, which means to spread out your investments. In this case, and no pun intended, to invest in all 3 cases would have been the best idea. Sure, you could have been the genius and only picked the Breakout case, in a time where investing into CSGO skins and cases was pretty much non-existent. Or you could have picked the Falchion case and would be quite sad that you've lost out on some potential return. And actually, not just some potential return, a lot of potential return. Diversification is called the only free lunch in investing, meaning that diversification reduces risk while keeping the expected return up. Another example of a standalone risk would be the many nerfs and buffs we've seen over the years. To mention the latest one, the M4A1S buff, which sent most skins for that weapon up drastically, while the M4A4 skins went down. We are talking about roughly 50% price movement, which is quite a lot if you think about it. The second risk is also interesting, and that's the non-diversifiable, or also called market risk. This risk is the risk that everybody has to bear when he or she is investing into Counter-Strike. Remember the charts about risk and return, as well as the typical stock market crash? That's the risk that every participant in the market has to carry, and everybody will be hit by it, no matter how hard you diversify. That's the risk that gives you the return, not the standalone risk, or better said, not the diversifiable risk. This risk can be fueled by different influences. A game-breaking update by Valve, a sudden decrease of the amount of players, or the rise of a competitor like Valorant can have a stark impact on the CSGO economy and price progress. Even worse scenarios have to be included in the section. For example, Valve could ban every marketplace like buff or skinport, which in turn would mean that the value of skins is drastically reduced as players and investors can't withdraw any money that they put into the game. These risks, and many more of them which haven't been named here, are sizably larger than the risks involved when investing into bonds or even market-wide stock indexes. Maybe even crypto, though that is up for debate. As they referred to risks like the decrease in the player base haven't materialized, the return has been quite phenomenal over the last few years. And to make one point very clear, I'm bullish, actually very bullish on Counter Stike investing. I'm putting a portion of my own investment portfolio in this market. The reason for this video is purely to underline that the return generated when investing into CSGO, and also any other investments, is always more or less in line with the risk and possible drawdowns that any investor has to endure. Meanwhile, certain YouTubers are talking about safe profits, insane price jumps, and are painting a picture that a 100% return per year is perfectly normal, and that's the issue, free of any risk. To sum this video up, risk and return are always linked. The higher the risk, the higher is the expected return. But far from all risks enhance the return. Betting on one asset class, like only investing into Counter Stike, betting on one skin or one case to go up, decreases your likelihood of success while keeping the possible return unchanged. And as a bonus note, think for yourself and don't get hyped up by some random YouTubers. Lay out a good and bad case for your possible investments and try to disprove your own idea. Just looking at the positive side is dangerous, especially if you're putting money into it. Thank you for listening and watching. I'm looking to upload quite a few more videos in the near future, and my goal is to help you to invest smarter into Counter Stike. Till then, bye bye.